If you stick around, I'll show you the simplest way to kick off your day trading journey, even if you're just starting out. What is day trading? Day trading involves buying and selling various instruments, such as stocks, currencies, or cryptocurrencies, within the same trading day. As a day trader, you closely monitor market movements, analyze charts, and use price action or technical indicators to spot potential trading opportunities. Understanding market structure. Day trading begins with understanding market structure. You open a candlestick chart, zoom out, and start analyzing. A successful day trader learns to ride market trends and identify who's in control, buyers or sellers. The first key to success in day trading is finding trades that align with the dominant trend. Uptrend. Imagine a staircase where each new high steps above the previous one. As long as the lows respect the previous lows, buyers are in control. But if the price drops below a previous low, it signals a market structure shift, indicating that sellers might be taking over. Downtrend. Think of a slide where each new low dips below the last. Sellers maintain pressure as long as the highs don't surpass the previous ones. However, if the price breaks above a previous high, it suggests that buyers might regain control, signaling another market structure shift. Sometimes the market takes a break from trending, and prices move sideways, bouncing between supply and demand levels, a phase known as consolidation. Trend trading, a beginner-friendly strategy. Trend trading is an excellent strategy for beginners. Its simplicity makes it powerful, especially for those new to trading. When the market is trending, day trading pullbacks is your best option. On range-bound days, enter trades at the extremes of the range, avoiding the choppy middle. It's even safer to trade ranges that align with the prior trend. For instance, during a consolidation following an uptrend, focus on buy signals at the lower end of the range. You're still trend trading, but in range-bound conditions. Price action and candlestick analysis. To accurately read the market, you must master price action and candlestick analysis. By understanding market momentum through candlesticks, you gain an edge over many traders. It's straightforward. The candlestick body represents the opening and closing prices. The wicks show the highest and lowest prices reached during that period. Bullish candlesticks, closing price higher than the opening price. Bearish candlesticks, closing price lower than the opening price. On trending days, it's all about price momentum and follow-through. For example, in a strong uptrend, you'll see a series of bullish trend candles with substantial bodies and high closing prices. The bars gradually ascend, creating a parabolic curve that leaves you wishing you had entered earlier. Pullbacks are brief, marked by narrow bearish bars with bottom wicks. Look for more bullish than bearish bars, both in quality and quantity. When these conditions align with market structure, seek buy opportunities. In a strong downtrend, you'll find consecutive bearish bars with medium-sized bodies and top wicks. Bullish pullback bars are small and short-lived, with each candle closing lower than the last. Again, if market structure confirms the trend, consider sell pullbacks. Another method to identify trends is by tracking the highs and lows of individual candlesticks. In an uptrend, each subsequent bullish bar should have a higher high, higher low, and higher close than the previous one. For downtrends, bearish bars should form lower lows, lower highs, and lower closes. When the market is trending, pullbacks offer the best trading opportunities, aligning your trades with prevailing market sentiment. However, range days are more challenging to trade due to the consolidation phase they represent. Reading a price action range. Start by analyzing wicks when reading a price action range. Ranges often feature wicks, particularly at the top and bottom, representing failed attempts by buyers and sellers to push prices beyond the boundaries. You'll also notice alternating bullish and bearish strength, with neither side maintaining momentum. In ranges, bullish and bearish bars are roughly equal, and strength is short-lived. Expect to see many doji candles and overlapping price action, indications of indecisiveness and sideways movement. When day trading ranges, always enter at the extremes, not the middle. Look to buy the lower channel of the range during uptrends and sell the upper channel during downtrends. Supply and demand, key concepts. Market structure and candlestick analysis go hand in hand with understanding supply and demand. As a day trader, you can't move the market on your own. This power lies with the big players who create imbalances in supply and demand. The smart money never places their full position at once. They break it into smaller parts to avoid pushing the price away from their desired entry point. This is where supply and demand zones come into play. Supply and demand zones are areas where banks have initiated positions, causing sharp price advances or declines. Demand zones attract buyers and cause prices to bounce up, while supply zones push prices down when banks unload significant sell positions. To spot these zones, look for sharp rises and declines in price. These are the footprints of the smart money. Big, bold candles with little to no wicks signal that the big players are making their move. To identify demand zones, look for a fast upward move. Place a line at the high of the most recent red candle before the price increase, and another at the most recent swing low. For supply zones, find a sharp decline and mark the low of the most recent green candle and the most recent swing high. In theory, when the price revisits these areas, it has the potential to reverse. However, not all zones are equal. Recent zones are more powerful, and supply and demand zones are typically one-time use only. Once the price hits a zone and reverses, it loses its power, reducing the likelihood of another reversal at the same spot. There are four main types of price structures that create supply and demand zones. Rally-base rally. A demand zone forms during an uptrend, like a pit stop for the price to regain momentum. Drop-base drop. A supply zone forms during a downtrend, indicating a continuation pattern. Drop-base rally. A demand zone appears when the market switches from falling to rising. Rally-base drop. A supply zone emerges when the market shifts from rising to falling. These zones act as magnets for future price action. When the price revisits a demand zone, it's likely to bounce up and continue its upward trend. When it revisits a supply zone, the price is likely to get rejected and continue its downward trend. Be on the lookout for opportunities when the price approaches these zones. VSA, Volume Spread Analysis. Volume Spread Analysis, VSA, is a powerful tool for understanding imbalances between supply and demand. VSA has two main components, spread and volume. Spread. The difference between the opening and closing price of a candlestick, indicating how much ground the market covered during a specific time. Volume. The number of transactions that occurred during the same period, showing how much effort was put into the price movement. There are two main VSA concepts. Sign of strength indicates that buyers are in control, causing the market to rise as demand overpowers supply. Sign of weakness suggests sellers are in control, leading to a market decline as supply overwhelms demand. VSA works hand in hand with the Wyckoff method, which theorizes that changes in market price result from effort versus result, or volume versus price. When price action and volume are in sync, the trend is likely to continue. However, if there's a significant difference between volume and price, the trend may be about to change direction. Top 5 sign of strength patterns. 1. Down thrust. A bullish pin bar or doji candle with ultra-high or above-average volume and a super-low spread. The mismatch between spread and volume indicates that demand is overpowering supply, potentially causing prices to rise. 2. Selling climax. A high-spread bearish candle with a large downward rejection wick and ultra-high or above-average volume, signaling more demand than supply. 3. Bearish effort. Lower than the bearish result. A high-spread bearish candle with a larger spread than the previous candle but lower volume, suggesting a bullish breakout could follow. 4. Bearish effort. Higher than the bearish result. A low-spread bearish candle with a smaller spread than the previous candle but higher volume, indicating that buyers might take over. 5. No supply bar. A low-spread bearish candle with a downward wick and lower volume than the previous two candles, indicating a lack of sellers and a potential price rise. Sign of weakness patterns. 1. Upthrust. A bearish pin bar or doji candle with ultra-high or above-average volume and a super low spread, signaling a potential price drop. 2. Buying climax. A high-spread bullish candle with a large upward rejection wick and ultra-high or above-average volume, indicating supply overpowering demand and a possible price drop. 3. Bullish effort. Lower than the bullish result. A high-spread bullish candle with a larger spread than the previous candle but lower volume, suggesting a future price decrease. 4. Bullish effort. Higher than the bullish result. A low-spread bullish candle with a smaller spread than the previous candle but higher volume, indicating a potential price fall. 5. No demand bar. A low-spread bullish candle with an upward wick and lower volume than the previous two candles. In summary, mastering day trading involves understanding market structure, trend trading, price action, and key indicators like VWAP and pivot points. By honing these skills and practicing risk management, you can navigate the market with confidence. Remember, success in day trading comes with time, patience, and consistent practice. Keep learning, stay disciplined, and you'll be well on your way to becoming a successful day trader. If you enjoyed the content, please like and subscribe to DigiCoin Daily Trading.